Hey everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, independent financial advisor and owner of Elevation Financial, located on the interwebs at elevationfinancial.com. You can find me there. Welcome, glad you're here. Today, we are going to talk about HSAs. We've talked about HSAs before here on the show, and we're going to talk about them again today because it is open enrollment season. Depending on when you're listening to this, if you're listening to it pretty close to the time I'm producing this episode, it's mid-November, and it's open enrollment season for many folks who are employed or looking at the exchange or picking health insurance options. It is open enrollment season. So I'm fielding a lot of questions about HSAs and having a lot of conversations with the families that I serve about HSAs. And so I thought it'd be very timely to kind of bring the HSA conversation back to the forefront this time of year. So we're going to talk through it. So if you are interested in HSAs, or if you are choosing from plans that offer HSAs, or just curious in general about this type of account, this is for you today. So let's jump in. All right, what's an HSA? An HSA stands for Health Savings Account. It is a type of account that is used for funding. You can contribute to it. It holds money, and it is tied to a high deductible health insurance plan. So there are certain types of plans that your employer may offer or that you may be looking at on the exchange. And some of these plans may be what's called high deductible plans. And as the name implies, the deductibles tend to be higher than their traditional counterparts. And they often, certain of these plans will come with an HSA option. There are HSA compatible high deductible plans that will allow you to open an HSA. So an HSA is kind of like a bank account or investment account. It's basically an account that holds money, and it allows periodic saving into this account for healthcare expenses. You can use the account for paying for general medical and healthcare expenses, and that's kind of what the purpose is of the account. So why would you want to consider an HSA? Is it useful? Is it not? Do you need it or not? That's a fairly big conversation that's individualized, so I can't really tell you if you should have an HSA or not. Obviously, this is I don't know anything about you, the listener, necessarily, so this is sort of a generalized educational conversation today. But as a general rule, some of the things to think about, an HSA is often great if you don't use healthcare services very often. So if you find yourself with fairly predictable healthcare expenses, and you don't tend to use healthcare services very often, then it can be a great type of plan and a great account, because you've got the high deductible that you probably won't meet if the trend continues, and you can redirect extra money into your HSA, and it tends to be often a great scenario for using an HSA. However, HSAs sometimes are not great if you have chronic conditions, or maybe have unpredictable healthcare expenses, or if you think you might need expensive medical care in the next year or so, and might find it hard to meet that high deductible. That may be a lot of expenses you incur before you meet that deductible. An HSA with a high deductible plan might not be the best option for you. So those are some things to consider as you're weighing the pros and cons. If you want to dig really deep into what's best for you, then talk to a professional. You can reach out to me if you want. I can either help you with a free money session or refer you to someone. So talk to someone individually if you really want to dig deep into this. But as a general rule, this is kind of what we see. The healthier you are and the less you use medical services, the more HSAs make sense typically. The more unpredictable or high cost your healthcare expenses might be, that's when an HSA might not always be great. So anyway, let's move on to how it works. How does an HSA work? How does a health savings account actually work? So it works by you simply set one up if you are eligible to contribute. Actually, you can set one up anyway, but assuming you want to contribute, you would have a high deductible HSA compatible plan, and that would allow you to contribute to an HSA. So there are two ways you can get an HSA plan. You can get it through an employer or through the exchange, through the Affordable Care Act. So your employer may offer a plan that offers HSA compatible health insurance plans, or if you choose an HSA compatible plan on the exchange through the Affordable Care Act, that is an option as well. So those are the two ways you can get an HSA plan. You save money into it. So after you set up your HSA account, which is tied to your high deductible health plan, then you can save money into it. And whatever money is inside that account, you can use that for medical expenses. So these can be, I mean, a huge list of things. I can't go into it all right now, but you can simply Google what can an HSA be used for, and you'll find all sorts of sites with a, big list of types of expenses that you can use an HSA account for, or funds for rather. And it's pretty much any medical expense, doctor visits, copays, um, contact lenses, stuff like it's anything that's medical or healthcare related typically will be covered. So check the list, obviously, if you want the details, but generally it's for medical expenses of most kinds. A nice thing about the HSA as well is that funds roll over. They are yours to keep. This is in contrast with the flexible spending account, or FSA. So not to be confused with FSA, which is flexible spending account, which is a use it or lose it situation. So with an FSA, when you don't use up those funds by the end of the year, you typically lose those funds. They don't roll over. HSA is different. You are contributing to your HSA, and those funds are yours to keep. They roll over. They are in your account indefinitely. So you can own an HSA anytime, but you can only contribute while you meet the requirement. So there is a scenario in which, 1 year you could have an HSA compatible health insurance plan, and then the following year you switch to a more traditional plan without the HSA option. Whatever money you contributed to your HSA stays in the account. You just can't contribute new money that year to it. So you can keep the account as long as you want, but the contribution has to be in the year that you have the HSA compatible plan tied to it. So some other nice things about the HSA, unlike deductible IRAs or Roth IRAs, there's no income limit to contribute to an HSA. So the lack of income limit is nice. There's plenty of flexibility for anyone to contribute to an HSA if they meet the requirements. No income limits tied to it. So let's talk about tax benefits with an HSA. A lot of people refer to what's called a triple tax benefit with HSAs. And that's just because there are 3 ways that the HSA is tax advantaged. One of those ways is contributions are pre-tax or tax deductible. So if they are through an employer plan, it's just coming out pre-tax. You don't have to worry about the deduction. It's just coming out as pre-tax money. So you get a tax break on the contributions. If it's directly like through a ACA plan or an exchange, you'll fill out IRS form, 8889 to track those deductions, and that will count as be a deduction on your tax return as well. So either way, you're getting tax deductible money or pre-tax money putting into that HSA, which is nice. So that's a tax break on the front end. Second factor is HSA money grows tax deferred. Now, if you leave it all in cash, we'll talk about this in a minute, but if you leave it all in cash, not a huge deal. But if you choose to invest in your HSA, those gains and any dividends, any capital gains, any kind of gains coming from the account, investments inside of it are tax deferred. You're not taxed on that along the way. So you get the tax deferred growth inside the HSA, which is nice. Third, this is number 3 in the triple tax benefit conversation. Withdrawals are tax-free for medical expenses. So much like a Roth IRA, if you withdraw HSA funds or use them for medical expenses, those withdrawals are tax-free. So any kind of gains in there, any kind of investments that have grown, those withdrawals will be tax-free. So those are the 3 angles of tax advantaged features of an HSA. That's why people say it's kind of a triple tax benefit. So, so can it be used after age 65 for non-medical expenses? The answer is yes. If you reach age 65 and after, you can use HSA funds for anything you want with no penalty. The caveat is it basically converts to a traditional IRA for all practical purposes, because you're simply taxed on your income tax rate at that time for any withdrawal. So it's basically kind of like a traditional IRA. Get a tax break going in, tax deferred along the way, and taxed at your income tax rate when you withdraw those funds. So that is kind of the nice feature of an HSA. It kind of converts basically to a traditional IRA type of scenario after age 65, which is nice. Now, at that time, if you're still using it for medical expenses, it's still tax-free. So you won't be taxed on medical expenditures. You will only be taxed at your income tax rate on non-medical expenditures or withdrawals from that account. Funds are withdrawn for things that are non-medical. There's a 20% tax penalty for early non-medical withdrawals in addition to being taxable. So be careful. It's pretty steep penalties if you use it for non-medical. So be aware of that. So are there limits on the HSA? Yes, there are contribution limits to an HSA each year. Going into 2022, as of the time of this recording, depending on timing when you listen to it, but this is going into 2022. The limit is $3,650, so $3,650 for individual coverage, and $7,300 for family coverage. Now, side note, this is just me. I don't like to say individual or family because I think you can be a family of one. I like to say families for everybody. I don't like to kind of distinguish between like, oh, a family and a not family. So that's just my little hang up. Just I like to say that when I use that terminology because the marketplace and the industry uses individual and family as a differentiator. But again, I say you can be a family of one. So I don't like that differentiator. But anyway, that's my hang up. So individual plans, 3,650, family coverage, 7,300 is your limit. If you are age 55 or older at the end of the year, you can put an extra $1,000 in as a catch-up contribution. All right, let's talk about investing. What can you put inside of your HSA? You can put anything you want for the most part based on the limitations of your custodian or the bank holding it. So a lot of people just use it for cash. They just, put cash in their HSA and they leave the money in cash. That's a choice some people make. It's just going to be stable and simple and no risk, and that's fine. Others choose to invest it. You have the option typically of investing just like you do in your IRA or your 401k. You can invest in mutual funds, ETFs. You can treat it kind of like an IRA or 401k when it comes to investing. Now, different custodians and providers are going to give you different options. A lot of the big ones will give you some pretty broad options. I've seen, a lot of, equity and bond funds and ETFs and a wide variety of mutual funds, often in some of the bigger HSA providers. So if that's important to you to invest, then you're going to want to look for a provider that provides a wide array of investment options. And again, going back to the feature of the HSA kind of turning into a traditional IRA at age 65, this is a very sound, reasonable approach to take for many people. It can be a supplemental retirement account. So if you're not using all of the funds every year for medical expenses and you leave some in there, or maybe you don't use it much at all and you just kind of keep building it up, at age 65, it turns into another retirement account that supplements what you already have. So that's a nice feature that makes it kind of multifaceted as an account type. So again, this is a very individual conversation. So I'm not telling you whether you should be in cash or investing or what to invest in. This is not my role today. But be aware you have the option typically of investing inside your HSA, and you have the option of kind of considering it as a supplemental potential retirement account, assuming there's funds in that account. So also a nice feature, after death, any funds remaining in your HSA are payable to your beneficiary that you've named on the account. So again, those funds are yours. That's your money. That's your investment. Once you pass, whatever beneficiary you've named in the account, the funds pass on to that beneficiary. So that's a nice feature. So as far as getting one set up, sometimes if you're working with an employer, especially, the employer will say, hey, you've got to use our bank for HSA accounts, and then you'll just have to use that bank. But very often they'll say, you know what, you can use any HSA you want, just set one up and we can, funnel the contributions over. So if you have the choice, you can certainly do some shopping around and look for an HSA provider to hold your HSA. I'm not going to name providers. I try to avoid ever naming providers on this show, just to, not get anywhere near any compliance issues or looking like I'm endorsing anyone. But I will say there are some, pretty big names out there in investments that provide HSA accounts. The big names you've heard of, they all provide HSA accounts, as well as your local bank. Your local bank will provide an HSA most likely, or credit union. So you might go to them as well. Also, there are plenty of online services. There are quite a few online HSA providers that are pretty good, very high tech as well, and provide a good array of investment options. So do some Googling or reach out to me if you want more individualized conversations around choosing an HSA provider. Many of them have no fees, so I would look for one that has no fees if possible. Weigh that against your investment options, but there's a lot out there that don't provide or don't have any fees attached. So that can be a good thing to look for as well. So that's the rundown on HSAs. Again, open enrollment season is here at the time of this conversation I'm having today. So it's a really good time to talk about HSAs and why they can be interesting and potentially valuable to some people. So that I'm hoping gives you kind of a rundown of what they do, what they're all about, how they work, and why you might consider an HSA. So as always, it's a very individualized conversation for most financial things. So if you would like to talk more about HSAs, definitely reach out. I think you probably know where to find me if you've been listening for a while. My website is elevationfinancial.com. There's a button there that says book a complimentary money session. You're welcome to use that to chat or send me a note through my website, and I'm happy to answer any questions I can. So with that, thanks for joining me. As always, glad you are here. And I already mentioned this before, but one more time, elevationfinancial.com if you want to reach out. Have a great day. See you next time. Thanks.